In today's weekly Forex forecast, we are talking about the DXY, the EURUSD, the Pound USD, the Australian dollar versus the USD, and also the Australian dollar versus the New Zealand dollar for the week ending May 24th, 2024. Now, if you guys do want my help with your trading, including full access, lifetime access to the course and real-time trading group, but you don't want to pay, for a limited time when you sign up to Prime XBT and deposit $500 or more, I'm going to give you lifetime access to both. So click on the link at the top of this video, and when you deposit $500 or more, you will get lifetime access to the course and real-time group. So that includes daily videos that you can only get there, exclusive setups from me, and you're also going to see my trades in real time. So I'm in Discord every single day helping out traders. If you have questions, you can just ask me or someone else there. All right, so see the link in the description of this video for a link to Prime XBT, or if you're on the website, click on the link just below this video. And one other thing too, when you use my link, you are going to get a 20% deposit bonus. So if you deposit $1,000, you're going to get a $200 trading bonus. Okay, so let's go ahead and get in here with the DXY, looking at the daily chart. So there are a few things happening here that I want to discuss with you that are going to matter for the next few days and potentially even weeks. So the first thing is that we've talked about this ascending channel that has been in place here all year long so far, and we did see the DXY retest this level exactly this week. So on Tuesday, what I mentioned was watch the area between 104 and 104.1, and this retest occurred at 104.08, so right there in that range. And today we can see that the market is pulling back a little bit. However, there is a reason for this, okay, a couple of reasons. And first of all, we have this level right here at 104.52, so this low from right back here. And this is what I mentioned in yesterday's VIP only video, which is an advantage of being in the VIP group, is that you do get those daily videos where we talk about all these markets every day. So the DXY, we have this low right here. The market did not quite close above it on Thursday, so we are seeing the market pull back a little bit here today. So no surprise there. And another thing too, notice this big red candle right here. Okay, this upper wick so far today is just filling in the imbalance from that candle. Okay, so on the one hand, we do have daily resistance up here at 104.52. We've also got that imbalance from this big red candle. Now, for the DXY, okay, I'm a swing trader on the higher time frames. So to me, everything that happens intraday here, I really don't care about. Because if I'm getting bearish on the dollar, it means I'm getting bearish right here into 104 support. And that makes no sense to me. Now, it's not to say that this is going to turn out to be bullish, because like I said yesterday in the EURUSD video, really there are varying levels of bullish and bearish. So right now I am cautiously bullish on the US dollar following this retest. However, in order for me to turn a little more aggressively bullish on this market, I do need to see a close above 104.52. So I need to see a daily close, not necessarily today, but over the coming days, I need to see a close up here in this area, right? To convince me that this is a short-term bottom. Now, what would convince me even more would be a reclaim of 105. If we got to close up here, then it would put the DXY back above this key level right here and set the dollar up for that next leg higher. Okay, so varying levels of bullish and bearish. Right now, I am cautiously bullish here, but I do need to see more from dollar bulls before I get a little bit more aggressively bullish on the dollar. Now, of course, if this were to fail, if we were to see the DXY close below here next week, so close down here and break this channel, then that would be bearish the dollar, at least short term, down here toward levels like 103.6. Okay, so I know a lot of people are going to look at this candle here today and see this long upper wick and say, well, this is bearish because we do have a downtrend, and now we also have this candle. And, you know, it could be. However, at the same time, you've got to pay attention to the fact that the market is testing the bottom of that channel support. Okay, so this could very easily just consolidate next week and then take off higher. It could break down as well, but there's more needed here from bulls and bears for the DXY for us to really conclude that this is going to be a short-term bottom, or if this trend is going to continue lower. So next up, we have the EURUSD, which is testing the trend line here from 2021 this week. So we've talked about this a few times in recent videos, and you can see where so far this week, this is the same level that I've discussed. You can see here on Thursday, the market did come right into that level, and it did reverse. Now, if you saw yesterday's video, the key for the EURUSD, okay, this right here, in my opinion, the fact that the market tested this level is not enough to go short. Because for me, I need to see some confirmation here. I need that high conviction play. And for me, in my opinion, that would be a sustained break below 1.086. This is what we talked about yesterday, right? Notice how the market is bouncing from here because Thursday failed to close below it. So as of right now, this is just more consolidation, very similar to what we got back here. The confirmation that this was a swing high was not this retest right here. It was not this. It was the fact that the market formed a base through here and then closed below it and then retested, okay? This right here, this breakdown and retest, this is what confirmed that we had a at least short-term top. And the same thing over here, right? We don't have that yet. So right now, this is merely just consolidation here for the euro between 1.086 and the top, or this trend line, I should say, from 2021, right around 1.088. So no confirmation here one way or the other for the Euro USD. If you're looking for shorts, again, I think we need a daily close below this, followed by a retest to give us that short opportunity toward 1.08. Alternatively, if we see the Euro USD start to break above this and it can hold that, then we're looking at a move back here toward this pivot right around 1.0925. So the pound is up significantly so far this week as the DXY does continue to rotate lower. And what I've mentioned before with the pound, very similar to the Euro USD, is we have this trend line off of these highs from back here in late 2021. And you can see where the market has not quite come into this level. So this is where it's a little bit different from the euro because we have the Euro USD testing that 2021 trend line. However, the pound hasn't quite reached that level, which comes in around 1.28. Now, we don't know if the market is going to reach that high, but what we do know is that this level right here is also going to be significant and has been significant right around 1.271. Okay, so this is going to be resistance. This is what we talked about previously. And you can see up here, we do have that trend line that comes in, closer to 1.28, which if we look at this here, it would, next week come in, potentially just below that mark. Okay, so we'll see if we get a full retest up here from the pound, closer to 1.28. It really depends on what the DXY is doing. But like I mentioned earlier this week, if you are shorting the pound up here, you've got to be careful. You've got to watch the DXY because a move all the way up here from the pound could put the DXY below that 2024 channel. Okay, so keep an eye on the DXY as well. If you are trading the pound, again, we could just see a sweep here of this level, which if we got to close above this and a close back below, then that could be a short right there, right? Grab the liquidity up here, fill that imbalance, and then we get a potential short. But again, it really comes back to the DXY and those levels that I mentioned. 104.52 on the DXY is going to be critical if you're trading the pound. Until that time, I really don't favor trading this one right now. I don't see a whole lot to do. Even though the market is approaching this resistance, I don't blindly sell from resistance. I would rather see something like a failed breakout to capture the liquidity above this level here before we get some type of opportunity. So I want to talk about the Australian dollar today because this is a potential setup, and I really have to stress the word potential because there really is nothing to do here just yet. And the reason I want to talk about this is because even though this market has been very sideways so far this year, because you can see that all of this through here was just a sideways market. However, the one thing you're going to notice is that right back here, okay, we did get a break below this. Okay, so this move right here is exactly what I teach in the course. And I go into detail about how to trade these, but these are called failed breakouts, okay? Or in this case, it was a breakdown, but the same rules apply. And the key here is that you're not looking for shorts following a break below these lows over here, as most retail traders do. Instead, you're looking to play the reclaim, okay? So you're looking to long the close back inside of this range. And currently, we have a situation where the Australian dollar could be doing something very similar, okay? So if we were to see the market close back inside of this range down here, very similar to what we got over here, then that could be a short toward some of these lower levels like these lows down here, okay? But this is a potential setup now. I really have to stress that because you don't want to go shorting up here until you get confirmation below 0.6627. And again, I really have to stress the DXY as well. We need to see more from the DXY, specifically 104.52, as well as a reclaim above 105 to show that we are going to get US dollar strength. Okay, but if we did get the DXY closing above 105 next week and the Australian dollar can close below this level down here, then this up here starts to look like a fake out, very similar to what we got back here. And this is all just a liquidity play, guys. This right here was a liquidity play because there were stops building up down here on these lows, right? When you get a range that builds up like this, you get liquidity that builds on either side of the range. So the same thing over here, right? We had liquidity building above all these highs, and this has served to sweep that liquidity. Okay, so again, the VIP course that I just launched does go into detail on all of this stuff. And we also talk about this in the Discord group every single day. Okay, so right now, a potential setup, this market could just continue higher next week. in which case, so be it. I do nothing here, right? So we either get the move higher, I do nothing, or we get the sustained break back below here, and we start looking for shorts. Obviously, this is just my opinion. It's never financial advice, but I do think that the Australian dollar is one to watch as long as the DXY can reclaim levels like 104.52 and 105 next week. And last up, I want to talk about a currency pair that not many people trade. It's not the most popular currency pair. However, the technicals here are some of the best in the Forex market. And what I want to point out here, very similar to the Australian dollar versus the USD pair that we just talked about, is the fact that over here you can see this is the 3-day time frame. So this trend line goes back to 2021, and you can see all of these lows along this trend line. I'm not going to draw them all out, but you can clearly see that this was a significant level. The same thing with this one up here. Okay, so this down here was a failed breakdown. Okay, so same rules apply as what we just talked about with the Australian dollar. You're looking for a reclaim through here, which we'll get into in a moment, and the same thing up here. So this is a setup that in the VIP group, we literally stalked this for weeks and waited for this reclaim. Okay, now full disclosure, I am short from all the way up here based on a breakdown from a 12-hour trend line that I talked about in the VIP group. Okay, so I am short through here. I added to it, through this area on this breakdown. So I do have a short position here currently. And again, we talked about all of this in the VIP group going all the way back to back here. As soon as the market broke above this trend line, we were stalking this and waiting for this breakdown that you're seeing. Okay, so far this is playing out really nicely, right? We got the move lower following the breakdown from this level up here. This down here confirmed that this up here was a failed breakout or fake out. So again, the course goes into detail on all of this, but I did want to present it to you guys just because this could have some more room to run lower in the coming days and even weeks if this level holds up right around 1.094. So you can see that back here following this fake out, right? Following this failed breakout, you can see where we got the reclaim right here on this candle and then retest as new support. Now, obviously, we got a really nice trend from this market following that. So this is a very similar situation. We got the breakdown right here on this candle. We got a reclaim on the very next one. Now, this was very close. It was very close to that level. However, this did qualify as a breakdown right through here. Now, we could still see a retest up here in this area next week because keep in mind that the weekly candle is going to have an imbalance up here in this area. Okay, so we could still get a little bit higher from this market next week. But as long as 1.094 is intact as resistance here, then I like the idea of a move lower down here toward levels like 1.087, these lows through here. Okay, and then if we break below that, we're looking at 1.0815. Now, why might the market come back here? Well, we've got a key level right here at all these highs and lows. And furthermore, notice what happened back here on this breakout candle. Okay, notice this green candle right here. There was no retrace through this. So that means that there is an imbalance down here at 1.0815. Okay, so again, as long as this area up here holds on a daily closing basis, I like the idea of shorts against this. Of course, never financial advice, just my opinion. Alternatively, of course, if we saw this market close back above here next week, then that would negate the idea. Subscribe to the channel and click the bell icon for notifications. Don't forget to sign up with Prime XBT and deposit at least $500 to get lifetime access to the VIP course and real-time trading group. If you're on YouTube, click on the link in the description of this video, or if you're on the website, scroll down and click on that link there for Prime XBT. Have a great weekend, and I will talk to you again next week.